conversation by saying that new highs are around the corner. Have a great Samvat yourself. Okay, with that, we turn to the one bank number which absolutely wowed the market. And let me tell you a secret here. We have our banking in-house expert, Abhishek, who writes the key points, key takeaways from the results. And the title of his slug had 8 wows. I mean, he was taking NIMs, he was taking slippages, so many things. And there are 8 wows in his report, indicating that the numbers were such a solid set. Let us invite Amitabh Chaudhry, the CEO and Managing Director of Axis Bank, to tell us more about the numbers. Amitabh, good morning, and thank you very much for joining us. Greetings for Diwali and congratulations for your numbers. I'm going to ask you the negative questions only because everyone knows the positives. The stock price is telling you that. Deposits. That's one growth which we would worry about. And the banking sector liquidity also is drying up. So do you think that you will have to hike deposit rates quickly and therefore your NIMs could be impacted as early as next quarter?
Well, Lata, firstly, thanks a lot for inviting me to the show. Sincerely appreciate it. It's always a pleasure to come here. You're absolutely right that, yes, the story on the deposit side for the entire banking system seems to be indicating that there is a clear systemic issue with liquidity being low. So every bank is scrambling for deposits. For Axis Bank, as we go deeper, there are some pockets of further improvement, which we are working on, because what we're really trying to do in Axis is to change the dynamics of how do we present ourselves in the marketplace, what kind of deposits we raise, how granular they are, what is the level of premiumization, do we have the presence in the deeper and the rural markets of the country, and so on and so forth. So it is a multi-year story which we're working on. But I'm glad to say that we have already unlocked deposit growth, and we should be able to sustain and accelerate the same. We have been working on various projects internally within the bank to not just go about managing the deposit growth quarter on quarter, but looking at a multi-year strategy and seeing how over a period of time the deposit growth, the level of deposit growth needs to pick up way over what the industry growths are. So if you look at, for example, Axis Bank, the growth across granular deposits continue to be faster and higher than the industry. We continue to gain district level market share. Number of districts where our market share is now greater than 5% has improved by nearly 35% since March 2020. Our premium segment is growing at a much faster pace. And, we have seen an increase in our premium deposits by 220 basis points year on year. Even on the term deposit side, while our rate of growth is slower, it is partly driven by the fact that we want to get our NIMs right. We're also focused on, the outflow on deposits. So we don't want deposits where the outflow ratios are higher. So there are multiple things which we are working on. We do believe that, yes, the next 12 to 18 months would be tough for the industry. And obviously, we are very much a part of the industry. It'll be tough for us. But given all the work which we've been doing, we should come out stronger, better. You mentioned the fact that do we expect to see NIMs getting impacted because of increase in deposit rates? Yes, repricing of deposits or the timing of repricing of assets and liabilities is different. You could see a bit of up and down across the industry in terms of NIMs because of this mismatch in timing. And yes, a lot of the liabilities are still to be repriced. You're also seeing that in the market because of tight liquidity on the incremental borrowing, the rates have gone up way above what a reverse repo hike would tell you. So all of us, all the banks, including Axis, are obviously trying to ensure that when we have worked so hard to get our NIM in a certain zone, we keep it there and sustain it there. It is not a one-time wonder which we've been working towards. I think the entire strategy of Axis over the last couple of years has been to build a sustainable franchise, sustainable P&L. So we don't want to get caught up in this one-time improvement and then, have a situation where, again, next quarter we have a problem. But yes, it is a problem we have to deal with. The fact that the rate of deposits or the rate of interest on deposits is going up.
Okay, all right. Good morning, Mr. Chaudhry. Going by all that you said, your NIMs, what should be the range then? You expect it to hold around 4%? And also, if you would give us some color on your loan growth, loan book growth. We had a couple of bankers earlier today who are indicating that corporate India, again, they are borrowing. And also the project loans are picking up. Do you echo that?
Well, let me first address the NIM situation first. As we pointed out in our analyst call, we had a distance to cover in our NIMs in comparison to some of our peers. And I think I'm glad to say that as a bank, the translation of what we want to do, which is our intent, to what we are able to achieve, which is the outcome, I think has gone up significantly. So in that sense, we are executing much better, and that is reflected in the kind of growth in NIMs which we saw. And initially, when you start work on a large transformation, you see an additive impact, but over a period of time, you see the multiplier effect coming through. And I'm glad to say that our consistency, reliability, and performance is improving. As far as NIM is concerned and where it will end up, my view is that while we don't give a guidance on margin, we have always talked about the fact that what we're trying to do in Axis is to build a sustainable franchise, which means that behind delivering this NIM is a real story and real work which has been done, and the idea is to sustain it. So we had promised to the market that we are working towards structurally sustainable NIM to reach 3.8. We have reached 3.96. We continue to optimize our balance sheet on both asset and liability side. And so what I'm really trying to tell you is that I'm giving you enough to say we should be in the same zone. And hopefully not only be in the same zone, we should be able to sustain it over a long, long period of time. As far as the loan growth is concerned, my view is that while opportunities exist, they come at a certain price. So we have to obviously balance our ambition on growth with what kind of pricing we are willing to live with. On the corporate side, you're seeing some small green shoots in terms of corporates announcing large projects. They're looking at borrowing more money. Also, as the interest rates globally have gone up, people are shifting more towards borrowing in Indian rupees. So you're seeing some of those green shoots appear, but is it large enough to have a positive impact on pricing? I'm not seeing that as yet on the corporate side. The retail side continues to see pretty decent momentum. So the combination is that on the wholesale side, the pricing remains tough. On the retail side, things continue to show good momentum. And I think that's what you will see in the quarters to come.
Okay. Mr. Chaudhry, good morning. Happy Diwali to you. I wanted to know a little bit on what's happening with the latest on the Max Financial issue. Is the whole, SEBI investigation over now? Or sorry, the MF issue. Is the whole SEBI investigation over now? And have you heard anything from the regulator?
So as we had told the market consistently that we had done our own internal investigation, SEBI had also requested us to go and do some very specific checks, which we have done. We have completed those investigations. We have submitted the report to SEBI. SEBI has asked us some more questions. We have replied to them, and we are in the process of answering all those questions. In our investigations, we have not discovered much. And whatever we have discovered, and we have seen any signs of people doing things which we are not permitted to do, we have taken action. Okay. But we are still await SEBI's direction in terms of what the next steps would be. We are obviously very committed to cooperating with the regulator and taking all the steps necessary to ensure and comfort the regulator and the market that our intention is right. We will do whatever it takes to ensure that an issue of this nature is never repeated again. But let me just end by saying that we are still awaiting instructions from SEBI, and our investigations have really not shown or brought up anything even remotely close to what the speculation I've seen in the marketplace.
Okay. All right, then let me ask the Max question, Amitabh. The IRDAI order was very clear. Max can't, sell to you at 166 on March 15th and buy from you at 31 rupees the next day. So they're not going to let you do the second leg at that lower price. Will you be willing to increase that price? Are you willing to go to 100 rupees or 150 to buy that remaining stake in Max?
So let me first start by saying that the transactions which were undertaken, which we have just talked about, 2 transactions, they're part of 2 separate agreements. And so one transaction was under one agreement, which got closed, and then a second agreement was initiated. We believe whatever we did, and there were a lot of parties involved, was absolutely as per the book. Enough lawyers have looked at it. Obviously, our regulator, IRDA, has a different view on how the transactions were undertaken. We believe we had all the permissions from IRDA for the same. Our view of the industry is very, very long term. We know and we would like to continue to work with the regulator. So we will obviously like to ensure that we are in line with what the thinking of the regulator is. As far as we are concerned, while the order talks about some of the transactions and why they have fined us, I am not very clear at this stage that IRDA will not allow X, Y, Z. Let it pan out. Let's see what happens. And depending on what the IDA directs us, we will take a call at that time. It's very will be wrong on our part to kind of start speculating that this is what IDA does, this is what our reaction would be. Our commitment to Max partnership remains. We are committed to, obviously, if everything permits, to continue to grow the size of our equity shareholding in the entity, and obviously continue to work with Max in the long run. But yes, let's wait and see how the next steps pan out over a period of time.
No. The more direct question is, will you be willing to pay more for the balance 7% stake?
And I gave a direct answer, Lata. I said that let the time come and then we'll decide at that stage.
Okay, it's open now. Well, when you look at the set of rates which IRDA, set of trades that IRDA has put in its order, it does look like a severe indictment that the trades are done at such different levels on subsequent days. So, did SEBI or anyone else, any of the other regulators, SEBI, RBI, speak to you on the matter or write to you on the matter?
No, we have not heard anything from SEBI or RBI in that matter. Again, as I said, these are transactions which are part of two separate agreements.
Okay.
And the first agreement where the shares have been sold at a certain rate, it also allowed us to sell another set of shares, which we extinguished. So we gave something up in that particular transaction. Then we signed another agreement under which certain buying of shares at a certain price happened. I mean, I don't want to go into details of the transaction. We have spent a long period of time to consummate the transaction, and obviously through the whole process, number of conversations have happened with IDA, a number of documents have been shared with IDA, and that's why I'm saying that we believe that we have done everything by the book. Obviously, I mean, regulator has a view, and we honor that view, and we are not standing here and saying that regulator is wrong. I'm just saying that we believe we did everything right. Regulator has a different view. We are working with them to ensure that we can find the right solution. I think it will be wrong on my part to start speculating on what that solution is.
Fair enough. Also, looks like IRDA doesn't want an insurance company to merge with a finance company. So this Max Finance, Max Life, union consolidation can also be impacted. Will that impact your relation with Max Life?
Well, that is something which Max Financial Services and Max Life do need to sort out over a period of time. Our investment is in Max Life. Our intention and desire is that Max Life gets listed at some stage. Obviously, it has an implication on the Max Financial Services shareholders. So I'm quite confident that, again, Max Life and Max Financial Services is working with the regulator. There was a stance which the regulator took many years back when HDFC and Max Life were trying to, merge. There was a stance was based on a certain opinion. Again, rather than speculating, I've told you what the desire of Axis Bank is. Again, let's see how over a period of time this pans out. But at some stage, we are quite clear that it will be best for everyone that Max Life does get listed.
Okay. Mr. Chaudhry, I wanted to come back to, the loan growth, because this is a very, peculiar time, right? I mean, it's the highest loan growth that we've seen, in the last 10 years for the industry as a whole, 18-20%. You being one of the biggest banks in the country, do you think that this is a sustainable run rate that perhaps through the course of the year, or is it largely because of pent-up demand? Corporate capex is now coming back after a very long time. What do you think the average loan growth could be for the industry, and particularly for corporate as well? Is it more working capital loans that are still being taken, or is it fresh project loans that are being executed?
See, at a macro level, for the loan growth to sustain at this level, given where the deposit growth is not possible. You cannot have a situation where deposits are growing in a single-digit rate and the loan growth is, racing ahead at 18-20%. Actually, loan growth needs to follow the deposit growth. Yeah. So yes, there is a temporary period where you are seeing this mismatch. It is, as I said, on the retail side, the momentum is quite solid and it continues. On the wholesale side, I think it is driven more by refinancing. I do not think that you are really seeing huge amounts of private capex coming through at this stage, which is driving loan growth demand. The hope is that will happen, but it is not really fructified on the ground as yet. Please also appreciate that a lot of deleveraging of the corporate sector has also happened over the last couple of years. So a lot of these corporates are actually in a very good situation and they can fund their capex growth, at least the small capex growth they're looking at on their own rather than going and really borrowing in the market. So yes, on one side, while I'm saying that there is still some hopefully increase in loan growth which could come from the corporate sector because you're not seeing enough capex happen as yet. the macro factors playing out globally could have an impact in India, because with the rising interest rates, you could have, obviously the regulator is also trying to reduce the inflation and working on inflation, and obviously they're doing various things to manage inflation. You could see a damping of demand on the loan growth side. You could see a deterioration of asset quality as a result also. So there are too many factors at play to really say today that, oh, no, we are very sure that the loan growth will continue at this rate.
Fair enough.
It's a very volatile market, too dynamic. But right now, standing where I am, I think for the next couple of quarters, the loan growth should continue at similar rates, given some of the trends that you are seeing.
Okay, can you leave us with just one last number? I told you the 8 wows that Abhishek Kothari came up with. One of them was for the fall in the cost to income. That's what it's a 2-year low or something. Do you have a target that's entirely in your hands? So from 46.5, is it now 46% now? Any target for the year, for next year?
So we have been guiding the market to not to cost to revenue, but more cost to assets of below 2%. And that's what we are very clearly focused on. We do believe that there's something which we'll be able to get to in the medium term. We have been investing a lot of money on our technology, analytics, transformation projects. The impact of some of those projects has started coming through. So the productivity lift is allowing us to show a higher revenue growth rate and get the right kind of operating jaws in the business. I'm glad to see and hear about the 8 wows. Hopefully, the number of wows can continue going forward in the future. But I mean, it's a long haul. It's a tough haul. And I think all of us in Axis and the entire management team of Axis is very focused in terms of delivering on the GPS strategy, which we talked about 3 years back.
Yes.
I'm delighted that this quarter surprised people. I hope we can do more going forward in the future.
All right. Very quickly, sir, before we let you go, any plans to raise some funds post the closure of the Citi acquisition?
I think we have been quite clear in terms of what we said in the analyst call. We have a very comfortable capital position. Again, depending, where we stand today, there is absolutely no intention to raise any capital till the Citi acquisition is done. We will look at the right timing, and we will look at the right price, and we will look at the fact that our existing shareholders don't get diluted unnecessarily. And moreover, the performance we are delivering, we are also seeing a situation where our current level of profitability is good enough to fund the growth of the Axis Bank business. So I'm kind of giving 2 parts to the, there are 2 parts to the answer. One, no intention to raise capital till the Citi acquisition is done. Secondly, post that acquisition also, we'll bide our time and do it at the right time, which makes the best sense for us and our shareholders rather than do it in a hurry. So that's
any worries at all about the Citibank card holders signing off, and therefore you want to negotiate a lower price?
Well, we have a deal. In our valuation model, when we priced the deal, we had obviously taken some attrition into account across their businesses, not only on the credit card side. We obviously are getting the business metrics on a monthly basis. And right now, when you look at the data, there is nothing which is worrying us. Yes, there is some attrition, but it's not to the extent which people are speculating about. We also had a kind of a backstop that below a certain level of performance, there will be impact on valuation. Right now, we are nowhere even close to it. So in that sense, things are going well. And we do believe that we should be able to close the acquisition either in the first quarter of the next calendar year or in the second quarter.
Got that.
I mean, obviously, with the year end coming in, you either want to do it just reasonably before the year end, or then, push it beyond year.
Fair enough. Fair enough. Thank you very much, Amitabh Chaudhry, for joining us with all those details. Congratulations for a great quarter, and here's wishing many more.
Thank you. Thanks, and wishing you happy Diwali to all of you.